Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Wednesday, April the 14th. The market's going to open up in about, let's see here, an hour and 40 minutes. I wanted to do this before the opening bell because I wanted to give you an opportunity to see how I analyze the markets, what I look at, all the factors that go into my analysis before the opening bell. And that's the key. A lot of things that I do during market session actually occur before the opening bell or the night before, and it gives me the setup for the next day. So when the market opens, I'm roaring and ready to go. I don't know about roaring, it's a little early, but I'm definitely ready to go. All right, so let's talk about global economy first, then I'll jump into today's market action and we'll go from there. So U.S. inflation, basically the global markets and Wall Street rose Wednesday after traders shrugged off higher U.S. inflation and a decline in Japanese machinery orders. I don't think we're going to I think we have enough inflation right now. Interest rates went from 1%, less than 1%, to about 1.6%. Long-term bonds, I think they're going to be steady for this quarter and possibly beginning or middle of the next quarter. And then as we get into the fourth quarter, we're going to see more inflation with interest rates going up to about 2.25%, 2.5%. But for now, I think we're stable, and I think we're going to go choppy and kind of just drift sideways with the bond market. I don't think we're going to see a lot of action over the near term because the price action going from less than 1% to 1.5 or 1.7 or 1.78 or something like that was quite a bit. I mean, less than 1%, 1.7%, that's huge. So I think we're going to be kind of sitting and waiting and kind of getting a gauge on employment, COVID levels, and so forth, and seeing if inflation can break up or if the stock market can go up another level above it. So on Tuesday, the S&P climbed 0.3%, very, very little. It's making new highs and propelled by tech and consumer stocks, but and yes, the optimism of America reopening, the vaccines taking hold, and all of that. But volume and volatility are very, very low, and that's driven by the bond market. Bond market is dead, and so is the stock market. There's a huge relationship between volatility in stocks and bonds. The U.S. government reported consumer prices increased by stronger than expected 0.6% in March, the fastest rate since 2012. We're going to see inflation, folks. There's just no doubt about it. It's impossible not to, based on the kind of economic conditions we have right now in the world. Higher inflation normally fuels fears that interest rates might be rising and bonds might be falling. Remember, there's an inverse relationship. But the Federal Reserve has said that the economy will be allowed to run hot to ensure a recovery is in place. Well, they can control the short-term interest rate, but they can't control the long-term bond. That's the market, and the market, that spread is widening. That curve is widening, widening, and widening. Singapore declined after the government reported unexpected strong first quarter economic growth of 0.2% over a year ago. Central bank left monetary policy unchanged. Singapore doesn't have a huge impact on global economy, not yet at least, so I don't think that's going to really create a big ripple in anything. Investors have been encouraged by the rollout of COVID vaccine despite renewed disease outbreaks in some parts of the world, like Japan, for example, that have prompted some governments to tighten or reimpose business and trade curbs. Yes, like Japan. Japan is hurting right now. South America is not doing well either. Airline cooled off, and we're going to talk about airlines in just a second. And the yield on the 10-year went from 1.62 to 1.67. And remember, as I said a minute ago, this thing was 0.93 before it started rising. So again, we got to be very, very cautious. And while the Fed says there's not going to be a lot of inflationary pressure on the short-term bond, the long-term bond, well, that's a whole different world. That's this right here. This is like 1% interest rates, and this is like 1.73 or 1.78, and this is the current 1.6 something. And as you can see here, volatility has been almost non-existent in the bond market. And if you look at the stock market, let me just show you a quick picture of the SPY, you will see a very, very, very similar type of environment. Notice, see, look at that, very, very low volatility. The fact that we're making new highs is great, but folks, we're diverging. The RSI now is at 78. Matter of fact, I want to see if we're still diverging. Yeah, we're still diverging. Look at this. Uptrend, downtrend, but the RSI now, it's almost not even diverging. It's going so high. Let me just correct this. This is still higher. This went all the way to 82, and we're right now at 78. So we're still diverging. But folks, do you really want to go long on the S&P 500 stocks with the RSI at 79 and this level of divergence? You got to be very, very cautious. You got to look for pullbacks, and you got to avoid overextended positions. And that's the trick right now. It's okay to trade an overextended market if you're trading a sector that's just getting going. But if you're in an overextended market and you're trading a sector that's overextended, that puts you in a weaker position. So the S&P is overextended right now. Let's look at the QQQ and see if we have some luck over there, just to give you an idea. So the QQQ broke down while the NASDAQ did not. We're still seeing divergence. That divergence is still there, right there. But it's not as bad. But still, I mean, folks, this is not pretty. This is a market that's setting up for some downside pressure. All right. Well, that page is stuck. But anyways, I wanted to talk about Delta Airline. As you can see here, the stock is pulling back to the 50-day moving average, and it looks like it's going to come back higher. I like the stock. I think airlines are going to go a bit higher. I think there's a lot of pent-up demand for travel. I was in Charlotte Airport, and it was crazy, just crazy. So I think we're going to see some higher prices over the near term on airline stocks. I would get in right around the 84 level and put my stop loss right below the low here, the 50-day line. If we break the 50-day line, I would be out, and I think we're going to make a new high and probably go up to about the 55-ish level, if I had to guess. So keep your eye on Delta. I like the stock, I like the sector, and I like the industry. Now, before I let you go, folks, I've got something important for you, something big, something you need to pay attention to. Really, really pay attention to. Not many people know this, but certain stocks, they tend to break out in secret 14-day windows. And those in the know on Wall Street have kept the secret far too long, far too long. And they have an almost unfair advantage to beat the market. Well, folks, I've got a hold of their secret, and it's time to even the playing field. That's right. Stop losing to these institutional traders. Gain an unfair advantage. I've developed a trading strategy for these 14-day windows that ordinary traders can use every day to help beat the markets. Make sure to get in on the action before people start discovering this secret, especially in these type of markets when things are moving and opportunities are in front of us. It's time to stop trying to pick winners in these markets, folks, flooded with secret strategies, and time to take control of your future by choosing a strategy that has beaten the market every year for the last 10 years. That's right. Start using a strategy that has beaten the market every year over the last 10 years. Follow the link below. Get in on this now, and I mean right now. And make sure to like this video, subscribe to this channel if you're watching on YouTube. Folks, stay ahead of the market by being the first to be notified when we post our next video. Follow the link. You got to check out these 14-day breakouts, and have an amazing day. Bye.